Netflix shares are up over 42% year to date in 2025. And of course, I'm happy about that because I've had Netflix stock rated as a buy all year long here in 2025. The streaming pioneer is scheduled to report second quarter 2025 quarterly financial results after the stock markets close on July 17th, 2025. Investors are asking me if they should buy Netflix stock before the company announces earnings, or if they should buy Netflix stock after it announces earnings, or if they should be buying Netflix stock at all before or after earnings. I'll answer those questions here in this video, and I'll preview what investors should look out for from Netflix in the upcoming quarterly financial release, and I'll share with you my updated proprietary financial valuation model for Netflix to show you what I believe is a fair value of this business today. Let's jump into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so let's start with the expectations for the second quarter and for the full year 2025 for Netflix. Now, the company has given a forecast for the full year in 2025. Revenue to come in at around $44 billion at the midpoint and an operating profit margin of 29% at the midpoint. Now, one thing I expect the company to do in the second quarter is to update their operating profit margin forecast for 2025. As you could see, in the first quarter of 2025, the company generated an operating profit margin of 31.7%. And in the second quarter, they're forecasting an operating profit margin of 33.3%. That means if they achieve this operating profit margin for the second quarter, the first half of the year will have generated an operating profit margin of about 32.5%, while their full year guidance suggests a 29% operating profit margin. And that means that if they don't update their guidance, they would be forecasting a big decline in their operating profit margin in the back half of the year. Generally, the fourth quarter is a lower profit margin quarter for Netflix as they launch more content in Q4 and absorb higher expenses in Q4. And so the company does expect a decline in Q4, but Q3 is generally not such a decline in operating profit margins. So I do expect when the company reports quarterly financial results, if they do report 33% in operating margin in Q2, they will upgrade their operating margin forecast for the full year 2025. On the revenue front, if they report in line what they're forecasting, 11 billion in revenue with 15.4% revenue growth, that's about on pace to hit their revenue target of 44 billion for 2025. I don't expect an increase in revenue as likely as I expect an increase in operating margin, unless of course the company beats their revenue forecast for Q2, then they could increase their revenue forecast for the full year in 2025. The business is generating significant cash flow from operations now at this large scale, 2.8 billion in cash flow from operations in Q1 2025. That was up from 2.2 billion in Q1 2024. And with no major cash expenses and with no major capital expenditures, I expect the company's cash flow from operations to continue at these levels for the foreseeable future and increase from this point onward. The newly launched ad-supported tier is incredibly popular with consumers. Netflix's management team has said roughly 50% of new customers are coming in through that ad-supported tier, which makes the service more attractive to more consumers, makes it more affordable, increases revenue retention because consumers are less likely to cancel their Netflix membership if they're paying a lower monthly fee. Additionally, what I've been saying as a result of the tariffs that have been implemented by President Donald Trump so far in 2025 and here in early July have been increased on certain categories. Today, President Donald Trump announced 50% tariffs on copper and threatens 200% tariffs on pharmaceuticals. So tariffs are going up, and that means the cost of goods are going up. Consumers will face higher prices when they go out shopping. But that's good news for Netflix because Netflix is a digital product. It's not paying import taxes. And when consumers think about their options about going out or shopping for products, they're going to think twice. And they might say, you know what? Instead of shopping for something or instead of buying something, why don't we just watch Netflix instead or subscribe to Netflix instead? It's a better value proposition than paying all these higher prices for all of these things that we're buying. What if we pause our spending on all of these other categories and just spend more time watching Netflix? It's a great value. We paid less than $20 a month and we get all this content to watch all month long. So I mentioned that I've had Netflix stock rated as a buy all year long. I last updated this recommendation on April 18th, recommending Netflix stock as a buy. Now, my proprietary discounted cash flow valuation model for Netflix has the present value of the free cash flow I expect this business will generate from today to the very long run at over $394 billion. The discount rate I'm applying is 12.6%. Netflix beta at 1.6, I expect will come down over these next few quarters and next few years as the business generates healthy, consistent cash flow and membership retention rates continue trending upwards as the company demonstrates its leadership in a category with strong tailwinds, right? Streaming content is significantly more convenient than other alternatives, and you're seeing consumers flock to streaming by the millions in favor of instead of watching content through a cable connection or a satellite connection. And that trend I don't expect will ever reverse. It's just so much more convenient to stream content. The intrinsic value or the fair value of this stock I calculated is $910. The current market price is $1,272. Netflix stock is soaring, as I mentioned, and it's near its 52-week high of $1,341. So the valuation is getting stretched here. And even when I look at the valuation, by the way, I'm getting these charts that you're looking at here from fiscal.ai. There's a link in the description. They have a lot of information for your decision-making needs. Netflix is also stretched in terms of the forward price to earnings valuation at 48. So whether I look at my DCF or the forward PE, Netflix valuation looks stretched and they've earned a premium valuation, right? This business has continued to demonstrate phenomenal performance. Revenue growth has reaccelerated. Their operating margins at 33% are the envy of all streaming companies. So I can understand, and that's one of the reasons why I've had Netflix stock rated as a buy. Now, to answer the question, should you buy Netflix stock before or after earnings? I would lean more towards buying Netflix stock after earnings. The stock price has increased by so much already in 2025. The valuation is already stretched. And so I still like the company longer term. I still have the stock rated as a buy, but I would lean towards buying the stock after the company announces earnings, digest the new financial results, and then make your decision after the company announces those results to make your purchase. So this is one that personally, if I wanted to buy Netflix stock, I wouldn't buy it before earnings. I would wait for the earnings to come out, and the day after or 2 days after, I'll buy Netflix stock then. And I'll be okay if the company's share price is 5% higher or 10% higher after earnings because the company demonstrated better performance and I'm paying a higher price for a better performing business. I'm okay with that. I'd rather take that risk on the upside rather than take the risk of the downside of buying Netflix stock right now before earnings.
Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.